Thank you once again for joining back for the second workshop for the day titled Pivot to Growth, which will throw light on how to adapt to evolving business paradigms in the changing world through hybrid business models and much more. To set the context for this meeting and introduce our esteemed speaker, Mr. Srikanth Velamakanni, I would like to invite Mr. Samir Jain, Chair, NASSCOM SME Council, and founder and CEO, Net Solutions. Over to you, Samir.
Thank you, Soumya. So continuing on the theme of growth, this workshop is called Pivot to Growth. We could have as well called it Growth from a Garage to a Unicorn, because our next speaker that we have for this workshop is Srikanth Velamakanni, who's the founder of this year's newly minted unicorn, Fractal Analytics. So Srikanth is the co-founder and the group CEO and executive vice president of Fractal. Fractal is a leading player in the AI and enterprise decision-making space. Fractal serves more than 100 Fortune 500 companies with AI data analytics and driven business strategies. Srikanth is the co-founder and trustee of Plaksha University. Plaksha promotes interdisciplinary learning by bringing together science and the liberal arts. And finally, Srikanth is also a part of the NASSCOM EC or Executive Council, where he serves as a subject matter expert on data and AI. So here's the backstory of this session. A couple of months ago, we were talking about this new series that we've launched with the SME Council called the Pivot Series. And I was talking to Srikanth about how we can do a session with our members on how to build new capabilities, and his capability being AI. And Srikanth had an extremely amazing idea. He said, how about we talk about pivoting to growth instead? Because that's the framework that he's used to grow his company from, like I said, from a garage to a unicorn status. And so this session came about, and here we are. So Srikanth's today going to talk about the framework that he's used at his company and how he's focused on growth alone to take his company to a unicorn status. Slight housekeeping notes. We're going to have 3 segments. After each segment, we're going to give a break for Q&A. So you have the Q&A question tab at the bottom. Keep adding your questions after each of those segments. We're going to go live with those questions, and then so after each of those sessions, and finally towards the end as well, we'll have a Q&A session. So with that, over to you, Srikanth.
Thank you, Samir. Now let's imagine the year 2009. Okay, we had just come out of the global financial crisis was in its full glory, and let's say March 2009 was an especially hard month for Fractal, because we had General Motors was one of our clients, who also represented, a double-digit percentage of our revenue. And we were told a week or 2 before they went bankrupt that, collect whatever you can collect now, because it's possible that we may not be around, or we may not be able to pay you any money after that. So we could not collect some of those bills, and then we lost all the entire revenue stream around what we were doing with General Motors. That was one. Second was, we were in a place where I had already spent 9 years building the company, around 9 years building the company. Fractal was, that was the only year where we did not grow. We were actually because the last quarter of the fiscal, Jan, Feb, March of 2009 was so brutal that we had almost 40% decline in that quarter relative to previous year. Overall net, we had a degrowth in that year. So that was the second thing that was going on. We had spent 9 years. We had founders with us who were with me, and we had a disagreement between our founders. Some of them left, and we had a legal case going on. I was trying to buy back those shares. No money left. Global financial crisis. All of this was going on. Now, add to that was I was also trying to see what to do next. So I had employed a coach. So this is a gentleman called Srikanth Gupte, who's the CEO of Marico, one of Marico's divisions, before he left. So he liked Fractal. He wanted to be a coach. I spent a couple of sessions with him. Then his thought was he could spend some time walking the aisles and understanding how Fractal really works. So he went around Fractal's offices, and a few days later, he came to me and he said, Srikanth, you're one of the most client unfriendly organizations I've ever met. there's simply no conversations of clients in your office. You are so focused and fussed about your craft of analytics, your craft of what you do. You're supremely arrogant. And I can't tell you how, but this is really difficult to win from here. For a company that is services oriented, which has clients, this is really tricky. So that's the point of 2009, right? So spent a significant amount of time. We were about 4.5 million in revenue at 2009. That was where, in terms of overall revenue, and everything was going wrong. And from there, it's been another 10 years, and a lot of good things have happened. So I want to tell you how I processed those issues, how we built Fractal from there, and where we have reached, and some of the lessons we have learned from there. So that's the idea. If you can please put up the slides, I would love to start walking you through the journey. Okay, so this is about, you've read books like 0 to 1, which talks about how to build a company from 0 to 1. But I think a lot of the companies here are essentially traversing the 1 to 100 journey, right? 1 million to 100 million, or 1 million to 200 million journey. And having been part of that journey, having led Fractal through the journey, I thought I could walk you through the stories about how do we make that happen, right? And this is what Srikanth Gupta said at that point of time, right? So this is the moment when I realized that there's something we have to do. My instant reaction to Srikanth Gupta was, no, this is not true. We are very client-centric. We are solving such amazing problems. Clients are happy. This is not true. So after spending some time in denying the reality, I got to working on the reality itself. There was something there for sure. It was rankling. And we decided to build Fractal strategy at that point of time, discuss our values, put together our values, and build the company almost ground up from that day. And a lot of good things have happened from there. Of course, there were a bunch of things that were happening around that time. The co-founders are left. I just mentioned all of these kinds of things. Okay. And I also want to mention one more thing about fundraising. Around this time, there was always some interest in Fractal being able to raise capital. But around this time, there was an investor who came to our offices, and this person was a senior of mine from my engineering days. Very successful, very smart guy, one of the smartest guys in class. And he spent, along with his American colleagues, he spent a day in Fractal's offices trying to see if they could invest in Fractal. And after all of that, he said, "Look, I really like the business. I don't like you. And I don't think you can scale this business. So we could have invested in this business if you were not around. But since you are so critical to Fractal's success at this point of time, we'll pass on that investment." So this was also a very brutal awakening. So a lot of these things were happening. And from that, we pivoted and we succeeded in some ways. So I want to tell you the story around that and some lessons that we can all use from there. Okay. So where is Fractal today? Right? Things have been going really well over the last many years. So today we serve about 100 of the Fortune 500 companies. We are on the leaders quadrant in Forrester and Gartner and every other place. We have a net promoter score, which is 70 plus. We've been investing significantly. Fractal scale is 172 million revenue for this fiscal with a run rate of 226 million. Things are looking positive. We are seeing tremendous growth overall at Fractal, right? And Fractal's vision, it has been about powering every human decision in the enterprise. And we have been successful in generating significant client value. About $1 billion for each client is what our goal is. And I think we have come a long way from those days in 2009. These are our values, 4 values: client first, do what's best for client. I'll unpack some of these. Learn and grow, which is essentially investing in people and understanding that half-life of knowledge is 3 years or less. Think big and act fast. We call them our aspirational value. We believe we can be bolder and we can act faster, but this is one strategic intent to think even bigger and act even faster. And lastly, most importantly, create a culture of trust and transparency. So extend extreme trust to people, give them a lot of freedom so that they can do their best work. So these are the 4 values of Fractal. And we measure our NPS. Every board meeting starts with this slide. What is our NPS? Where is our NPS? Net promoter score. How do clients really think of Fractal as a business? Do they want to work with us again? This has been one of the pivotal moves. From Srikanth Gupta's feedback, we truly internalized and said, how do we build a business around client success? And measuring client advocacy was one of the most important ways. So we built this out, and this has remained at 70 plus in the last many quarters, and before and after the pandemic as well, even through the entire disruptions of the pandemic, with just one quarter which is slightly below 70. 70, as you know, is a very high bar for an NPS. Most loved consumer goods companies, consumer product companies are at the 50 and 60 NPS. B2B, it's unheard of. I think generally NPS are in the 30s and 40s, the really good ones. And I know one bank which told me that their NPS was I think negative, and then it was a low single digit, then became a slightly double digit number. So we're happy that our NPS is here. So this is some of the changes we've been able to bring about, and also fortunate that we're able to serve some of the largest, most impressive, most admired clients around the world in a number of industries. And a lot of good things, even a Glassdoor and other ratings are all indicative of the fact that we've been able to build a great place to work. We have been on the Great Place to Work list off and on for several years, Great Place to Work certified for many years. And most proud of is we are on the Great Place to Work for Women for 2020 and 2021 as well, and hopefully 2022 as well. And we've spent significant amount of time on R&D and other things. I'll spare you all of that. So now what I will want to tell you about is how did we get there? First segment I want to focus on is growing oneself to grow the business. It's one of the biggest insights for me is that I have always been the constraining factor for Fractal's growth. And every time I have managed to grow myself, I've been able to grow Fractal. I know many of you are here entrepreneurs, and it's hard to recognize that I could be a limiting factor for my own growth. When that VC investor told me, Srikanth, you are the reason I'm not investing in Fractal, that was a hard blow. But the idea was that, okay, I can grow myself. If I can grow Fractal as well. Okay, so let's discuss what are some of the lessons around that. I grew up in a small oil town in Assam, and my father used to work for the materials management part of the business. And he told me, Srikanth, an honest businessman is an oxymoron. So I grew up thinking that I will never start a business because business is corrupt. And things changed when I met Mr. Narayan Murthy in a business ethics class in 1997. This course was offered by Dr. Deepthi Bhatnagar, and she had a guest lecture, and Narayan Murthy came for that. And he spoke about how he had built Infosys, powered by intellect and driven by values and all of that stuff. And I was quite taken in. And I thought one of the assumptions about not being an entrepreneur for me was that I don't want to build a corrupt business, but looks like there are honest businesses out there. So that really did, when I look back, that was a pivotal moment where I decided that, okay, maybe entrepreneurship is not a bad idea. The second point I would mention is also over the years, I've figured out that it is about eventually finding your sweet spot. What is a place where you feel like your strengths are matching the task at hand, right? Sometimes if you don't find, we have to be in that, this is a framework by Csikszentmihalyi, where it says flow is a function of whether you can, whether the task, the skill level and the challenge level are matching. If your skill level is slightly below or matching the challenge level, that's when you're in a state of flow. It's the equivalent of a cricketer saying, I'm seeing a cricket ball like a football, right? Because I'm in the zone. I can hit a ball, any ball on its merit. So that's really the sweet spot. How do you find that? And it is a combination, in my opinion, of pleasure, meaning, and strength. Or think of it as, is the work really that you do is enjoyable? We spend so much time in our life doing the work, right? Being in office. It has to be enjoyable. It has to be pleasurable. Second is it meaningful? Is it really, do we feel like we're changing the world in some meaningful way? And third, is it an area of strength? Are we really losing track of time? So finding that sweet spot for me meant, one of the things for us was that, okay, for me, it was about mathematics, because that's been a strong suit for me throughout my life, and human behavior. While doing my engineering, I realized that I was spending more time in reading psychology than in engineering. So human behavior, psychology, and math, finding analytics or AI, which was a combination of these, was game changing. So that obviously meant that I was very passionate about what we were building. So that definitely was one of the helpful things. And when you find that, it no longer becomes a job or a career, it becomes a calling. It becomes a calling because you can really spend significant amount of time in that. So in 2007, our founders left. I was in a very tricky state at that time. I'll tell you this incident that happened. I was with Ganesh, who was the CEO of Tutor Vista. He had recently invested in another analytics firm called Marketix, which had a very significant exit in their business. So I went to Bangalore to meet Ganesh to get some advice on how to build Fractal. I was in Bangalore sitting in his office in 2007, and as I was chatting with him, I had this temptation to look at my BlackBerry, which was sort of a new thing at that time. So I looked at my BlackBerry, and it turned out that there were 3 emails with the subject resignation. I was like, what is going on? Why am I seeing resignation emails? So I went back to speaking with Ganesh, and a few minutes later, a couple of more resignation emails. And then I had to stop this meeting. I told Ganesh, something really terrible is happening in Fractal. I need to head back to Bombay. So I took a flight, the next available flight, reached back Mumbai. Turned out by the time I reached back Mumbai, there were 13 resignations. Fractal was an 80 people company at that time. There were 25 resignations over that weekend. The founders of my co-founders had basically decided that they wanted to exit and take the people and build something else. So it was a very, very tricky time. Especially because a year before that, they had unanimously elected me as a CEO of the company. We had a meeting in London where there was a pitch for who will be the CEO. There was a full process for electing me as a CEO. I was elected as CEO, but 6 months after that, they had come and said, look, I don't want to work with you. You are a terrible human being. And so that was the state. So this exit happened. Then the events happened around 2009. And for me, the clear sort of insight for me was that, look, these guys really trusted me. Right? I fought them because they were doing something I thought they were doing something very bad, which is taking people away, disrupting the company is going to shut down. But the big breakthrough in my life happened when I realized that my ego is one of the biggest reasons why this is happening. They trusted me to be the CEO, but I did not somehow manage to run that company in a way that they could continue to be part of it. So when that happened, I went back and apologized to them. And I think they decided to sell back their equity to Fractal and then, to us, and we managed to buy back, resolve the issue. We solved the problem, and that's when the growth actually began happening at Fractal. This is one of the very pivotal moments. And my insight was that no problem can be solved from the level of consciousness that it was created in. Till the time I was fighting that battle at that level of consciousness, I was not able to solve it. The moment I could grow out of it, Fractal, the problem dissolved and Fractal started to grow as well. These are some of the people that have influenced my thinking over these years. I want to quickly mention some of these people. The first one on top left is Clayton Christensen. He has really, I've followed a lot of his work. And one of the most important things I've learned from him is the idea of disruptive innovation. His point is that disruptive innovation always happens from bottom, right? Every industry is disrupted by a player who seemingly looks like a lower value add compared to the premium player, but because they can bring in technology and they can improve their costs over the years, they will come and take over your industry, right? So for me, we were essentially the disruptors for management consulting industry. So management consulting was solving all these problems, advising people on strategy, but they were never using any data. They were not solving any problems, right? And they would never get into the depth of any data. We could actually use models, mathematical models, predict, use the organizational data, and we were certainly cheaper than management consulting firms by a lot. So that it was clear that management consulting industry is going to be disrupted because eventually analytics and AI will be a smarter way of actually making a whole host of decisions, operational, strategic, and tactical decisions. So that was an insight from Clayton Christensen. The second one on the top right is Peter Drucker. He is probably the most influential thinker that I have learned from. And his core thing, I would say, is this idea of strengths, right? Know your strengths, which we just talked about. Know your pleasure, meaning, and strength. That is something that he talks about a lot. And one of the things I also learned from him is knowing yourself. Knowing yourself is a key to success. So that's the thing I learned from Peter Drucker. On the bottom left here, you see is is Marshall Goldsmith. Is a great executive coach. I'm fortunate to have him coaching me even today. And Marshall Goldsmith, one of his books in 2007 was "What Got You Here Won't Get You There." And the book title itself explains a lot, but he talks about how successful people are deluded that whatever has got them success so far is what will keep giving them success. And therefore, a lot of their destructive behaviors, they continue to exhibit those destructive behaviors because they think that's what is giving me success. And recognizing your destructive behaviors and fixing them is a key to a success. So one of the things for me in that was, am I adding too much value, right? Am I micromanaging my team? Can I step back and let higher grade people, let them do their best work? Marshall Goldsmith, great executive coach. I learned that from him. In the middle here is Bob Cialdini or Robert Cialdini, and his book called Influence has been one of the most influential books in my life, which is about human psychology, how human beings really work, how to the principles of reciprocity and scarcity and social proof and unity. He has written 7 principles of influence. I would highly recommend that, but it has been influential in how to think about selling, into how to think about sales, how to think about building culture. Bob Cialdini's book has been very influential. And finally, most importantly, is Jeff Bezos, whose 2 principles of Jeff Bezos that I have tried to live and learn from. I saw this interview of Jeff Bezos in 2009 with Charlie Rose, where he talks about, Charlie Rose asks him, what is the differentiator? You're just another e-commerce company, right? Even selling stuff online. Anybody can sell stuff online. So what makes you different? He said there are 2 key reasons why Amazon is different from any other player. The first, he said, is extreme customer centricity. He said, we take customer centricity very, very seriously. We'll do what is right for the customer at any cost, right? And true customer centricity means invent and invest on behalf of your customers. That was really game-changing insight in my head, especially after listening to Srikanth Velamakanni. This was a very key thing. The second thing he says is build the business for the long term. He says, he said in that interview that most companies, when they think long term, they're thinking 3 years, 4 years, maybe 5 years. Nobody thinks beyond 5 years in terms of long term. But as Amazon, we think 7 years ahead, and we are willing to make bets and stick to those bets for that long. And that really is what makes us uniquely differentiated vis-a-vis other players. And it has, after that, in the last 10, 12 years, Amazon has really shown that they're truly long-term, they're truly customer-centric, and obviously they're conquering the world. So these are some of the most influential thinkers that have shaped my thinking over the last many years. So I'll just go quickly to the next slide here, which is, the other thing I learned over these years is that there's so many leadership books out there, and if I could distill everything into what I have learned as the 2 principles of great leadership, as A is providing clarity, right? There is so much confusion at any point of time. We are living in a volatile, uncertain, complex, ambiguous world. Can we distill all of that and provide clarity to the team that this is what this is where we are going? Yeah, they're all shades of gray, but at any point of time, leader has to make it black and white. To the extent they can make it black and white and provide that extreme clarity to their people, it is the one trait of leadership that nobody else can play. That's number 1, right? Number 2 is optimism. To be able to tell people that, yes, we are going there and we will get there, right? And regardless of whatever bad things are happening, can we be the leader that shows them that there is a path out there, we will get there, and continue to believe in that. These are the 2 things that I've learned are the true defining characteristics of leaders, and I try to provide that in my own organization as well. Now, the last thing I'll mention is a framework that I've been using in order to make decisions. And this, again, I will say that I've learned it from a number of different people, but including Jeff Bezos. He talks about the framework of regret minimization. So when Jeff Bezos was thinking of entrepreneurship, he was at D. Shaw in 1995. And his boss basically told him, look, you're at D. Shaw. It's a brilliant hedge fund. You'll make tons and tons of money. So much is going on that is right for you. Why do you want to go and start an online bookshop, right? Jeff Bezos said, yes, I agree with you. He took a day or 2 to think about that and came back and he said, I fully agree with you. I have a great path ahead, but I'm thinking, what will I regret more? 20, 30 years later, when I have my grandchildren and they ask me, what were you doing when the biggest internet boom was happening? What were you doing? And I don't want to say that I was just I was, doing nothing. I was just working in a job, right? So he said, I will regret not having started Amazon way more than having started Amazon. So based on that framework, regret minimization framework, he decided to start Amazon. So similarly, I mean, just one example of regret minimization framework in my own life was when COVID hit in 2020, and we were thinking what to do. I decided to write to various authorities in India, IAS officers, etc., that I knew, saying, I think this crisis, data science will also play a role in resolving of this crisis. Can we help? Initially, there was no response. Early March, there was no response. By 21st of March, I got a call from the municipal commissioner of Mumbai, and then after that, Karnataka and Telangana, and saying that we will need your help. And so we decided to jump in and contribute to the cause, did a lot of work along with NASCOM in different places. And the operating thing here was also regret minimization. I was thinking, when my grandchildren asked me what was I doing when COVID hit, I didn't want to tell them that I was watching Netflix and Hulu and Hotstar while this was going on, sitting at home and in my PJs. So I thought should do something. And therefore we started working with the government. So that's another framework that I found to be very useful in life, regret minimization. Okay. And now I'll take a quick stop here and love to have Samir back on stage, and let's take some questions at this point of time before we go further. I would love to walk you through how Fractal builds our strategy, and what is the framework for strategy, how to build commercial traction, how to build client growth and people and culture in the next couple of minutes. But before that, love to take some questions. Maybe Samir, if you have any questions for me, happy to do that.
Sure. So no questions from the audience, but I thought that was amazing insights and frameworks. I did have one question myself. You talked about the brutal truths and the fact that you weren't client focused, but you thought you were, and then your investors said that we could invest, but for you, you're a bad CEO, we won't invest in you. So what was the process of identifying some of those gaps in yourself and then fixing them? So what was that framework like for you?
Yeah, absolutely. So I think, one is getting feedback, right? Feedback is brutal. Feedback is very hard, but I'm very sensitive to feedback. I'll be very candid with you that I always seek feedback, and I get very rattled with feedback. That's initially. In the initial, I resist feedback, and I also, sometimes push back against feedback. But I don't. I do process it. So I think I process it a lot. I ask for feedback and I process it. And I've hopefully, culturally, we have created a culture where people are willing to give feedback. And you have to really make it safe for people to provide feedback. So all of these inputs came from other people, and other people telling me, including my spouse, coaches, Srikanth Gupte, and Fractal team members who provide this feedback, which the process, and then step by step, try to see if I can work on it. And all feedback has some element of truth in it. You have to see what it is. You don't have to take everything, right? It doesn't mean that you're a bad person just because you have a bad quality. But if you can separate yourself, you're still a good human being, but you have all these issues that you have to work on. So that's how I fixed myself. As far as Fractal is concerned, we went through a strategy exercise, and I'm going to talk a little bit about strategy in the next session. But what we did was we looked at a framework called, I think it's called the Delta model of strategy, right? It's you actually find it if you search it online. It's a really nice model. And with the help of Srikanth Gupte and the executive team, we sat together in a conference room, hold up in 3-4 days, and we said, what are the various pivots or various kinds of strategic directions we can take? One of them was to be the best product strategy, which is around saying, we build a product, we are the best in the world, and talk about that, and it's the best product strategy, right? Second strategy option was operational effectiveness strategy. So you reduce your cost to a bare minimum and make operationally efficient. As you know, Michael Porter says there are only two strategic options, right? Either you're differentiated or you are low cost, right? So best product is like differentiation strategy, and operational efficiency is like the low cost strategy, right? But this Delta model talks about a couple of new options. One option, it says total client solution strategy, which is, okay, build your business around a few clients and just be very relevant to them, be very significant partner to them, and understand their ecosystem. In our case, learn their data, right? Learn their data and be a very good partner to them. So that was the third strategic option. The fourth strategic option is called like a platform model, right? Like think of Visa. It's called the system lock-in model, where your buyers and sellers think of an auction platform, think of Amazon as a platform. That's a fourth strategic. So that's a delta model. So the fourth model was not applicable to what Fractal was doing. So we had an option between the three, and we were naturally the arrogant, best product company type of a model. And we said, no, let's be the more client-focused company, because we never can be operationally efficient. We knew that we are a high-cost company. We will never be operationally efficient. We recognize that. So we had a big tussle between best product versus total client solutions. And Srikanth Gupta said, forget it, not happening. You're not going to be a client-centric company because you're so far away from it, it's not going to happen. So we said, no, we will make it happen. All of us came together. We said, we'll make a genuine change. We put out a full list of things we will do. And it was a full PowerPoint presentation, walked everybody in the organization through it. But the key insight was that all of that distilled into one thing, which is let's focus on NPS. And let's measure NPS, let's focus on NPS. And by the way, stop selling for one full year. We actually stopped selling for one full year, just to make it clear that if we don't focus on our existing clients, we won't grow. So we did not sell for one full year, focused only on serving clients well. And then the growth started. And then we built a sales team. Everything else happened after that. But that was a pivotal way in which we made the shift.
Okay, plenty of questions now. You talked about NPS. I'll pick it up later. You also talked about differentiation, low cost or differentiated. Someone has asked a question around that. I don't know if a better time to ask that question is after you've done the second segment. But relevant.
Feel free to ask. I can answer.
Okay, sure. Let me go ahead then. So Himanshu Sadeva is asking, when you say it's better to start an entrepreneurship journey, what's the motivation for your employees who are doing jobs for your company? I mean, what's their motivation? Why are they still working with you?
Yeah. So everybody has a different risk appetite and a different journey, right? So entrepreneurship is not good for everybody. In fact, I do, in general, discourage entrepreneurship because, especially if people take entrepreneurship for these three reasons. Number one reason is I'll make more money. Entrepreneurship does not make more money risk adjusted. That is number one. Number two is I'll have more control over my time. Entrepreneurship means you have zero control over your time. Everybody is controlling your time, and you're basically plugged in 24/7. And three, entrepreneurship, when you feel like I'll be my own boss. I mean, that's the least true statement on the planet. Right? Everybody is your boss, right? Because including your spouse, your landlord, and your people, everybody. So if you're starting a business for these reasons, it's a bad idea. But if you're starting a business because an idea has taken hold of you, or you feel like this is something I must do, and you can't sleep or do anything but think of this business, you can't wait one more day, that's the time entrepreneurship is required. And for Fractal, what we do is we have actually created space for people to become entrepreneurs within Fractal, and I'll come to that in some time. But we have enabled people to pick up an entrepreneurial idea, build a business, and we have a process called Ideas to Business, and we have incubated something like 8 or 9 companies within Fractal. And these are all people who have emerged as entrepreneurs from within. So we have created that space for people to become entrepreneurs, should they choose to be, should they want to take that kind of a risk and move forward.
So Rishikesh Vakatkar says, can you share some beliefs that were limiting, and what was the process?
Yeah, what were the limiting beliefs, right? That's a good question. I think one thing I'll come to in a short while is about the difference between smart and healthy, right? Building a smart organization, I think all of us understand what it is. It's better HR, better finance, better technology, better marketing. Building a healthy organization, totally different thing, which is minimal politics. Everybody's on the same team. So one of the limiting beliefs could be that it's all about building a smart organization. But I think what I've learned over the years is that building a healthy organization is way more important than a smart organization. Second thing is thinking that just because you are the boss, you have all the right answers. I think that is another limiting belief, to think that I'm the smartest person in the room, and therefore many smart people, at some point of time, me included probably, right, hire people who are not as smart as them because they want to be the smartest guy in the room. And I think the day you sort of get over that belief and say, my leadership journey is about hiring people smarter than me and enabling them to succeed, and therefore them, having better answers and having the humility to accept that you're not the best in everything, though obvious however obvious it sounds, and then letting smart people come in and tell you how to do it. I think that is a big game changer as well, which I think at some point of time I wanted to be the smartest guy in Fractal, and the day I stopped that quest 10, 12 years ago, I think maybe a little longer than that, I think that was helpful in Fractal's success.
So maybe when we talk about culture, people, and systems, we can talk about how do you compensate these really smart people? How do you afford these smart people? But just closing this segment is Prateek, and he says, how do software services companies discover its differentiations, or how do they differentiate themselves? How do they discover what they are?
I think part of it is look for where success has already happened. One of my sort of principles is what is called as the bright spots approach, right? You already have instances of great success in your organization. We always spend too much time on discussing failures, right? I mean, I think someone said, if your child comes home with a report card and let's say she has 4 A's, 2 B's, and 1 F, where are you going to spend most of your time on that 1 F, right? She's got 4 A's. You're not going to spend any time in appreciating and learning how did she get those 4 A's. We're going to spend all your time in that F. I think we do that in the organizations as well. But I think it's important to look at those 4 A's. So look at those bright spots in the organization where you truly excelled. And that is where the differentiation lies. We have learned a lot from our clients. Many of our clients have come and said, Srikanth, we decided to work with you because because of your culture. It was like, this is the most difficult thing to differentiate yourself on. How can you go and say, hey, I have better culture or I have this culture? But I realized that culture is the most sustainable differentiator for any company, because it's impossible to copy somebody's culture. You can copy policies, but policies without an integrated culture is going to look very, very anachronistic, or it will be very odd. So you can only copy policies. So that's why I think culture is the biggest differentiator. But there are things in your organization that you have to look for. Where I have found great success, you will find the answers from those pieces, in my opinion.
Sounds good. So let's move to the second segment then on sales strategy and growth.
Thank you, Samir. Okay, we can have the slides back up, then I can start going there. So this section, team, can we have the slides back up? Yeah, thank you. So this section, I'll like to spend some time on how to build a strategy and how to create growth, right? So how to build commercial traction and how to sort of put together the strategy. One of the things I will mention here is that strategy is as much about what not to do as it's about what to do. It's so crucial. Most of us think that strategy is about covering your bases, right? Just have one foot in every little boat out there. But that essentially is not having strategy. Strategy means, in fact, if you have to really say it, deciding what not to do is the most important strategic decision you can make. So this is a framework by Roger Martin and A.G. Lafley. A.G. Lafley used to be the CEO of P&G. Roger Martin, professor in Rotman School of Business. So I found this to be the most useful, most accessible framework to build one strategy. So if you have something better, by all means use it. But if you don't, my suggestion is buy this book called Play to Win by Roger Martin and A.G. Lafley. And it's very easy to use framework. These are essentially, he says, strategies about answering these 5 questions. Number 1, what is your winning aspiration? And that is very important. In Fractal's case, it was about powering every human decision. And that's how we defined it, right? And working with those Fortune 100 companies, serving them, etc. So second question is, where do you play? Like, what is that? Where do we play is essentially, what is my playground? What game am I playing, right? Which is essentially what geographies you want to target, what verticals you want to target, what kind of clients you want to target, what kind of problems you want to solve. You keep defining this across a whole range of dimensions. In case of Fractal, we do have 3 legs to where do we play, which is one is what kind of clients we want to serve and what kind of clients we don't want to serve, geographies, verticals, all of that stuff. Second, where do you play in terms of talent? who do we want to hire, who do we not want to hire. And 3 is in terms of mergers and acquisitions and investments, where do we make the investments and when we not make the investment. So we have 3 vectors around this question of where do we play. That's the second question. Third question is how to win. Right? Now that you've defined which game you're playing, are you playing cricket or football, right? In some ways, think of that, right? And where are you playing that game, right? Then the question is how to win, right? Most of us think that how to win is essentially strategy. No, strategy is actually these 5 questions. How to win is about how can you win vis-a-vis anybody else who's playing that game alongside you, right? So that's how to win. This is about how do we win various moments of truth, and we'll come to that in a little bit. Fourth question is what capabilities do I need? Now that I decided what game am I in, where do we play, how to win, then question I have to answer is what capabilities do I need to have to win this game? So what kind of exercises, what kind of routines do I need to have to make sure that I have all the capabilities required to win? And last point is what kind of systems and processes do I need to make this happen? So if you just answer these 5 questions along with your executive team, I think this is so important that the entire team is involved in writing this answers to these questions, and then you stick to those questions. It makes a massive difference in being able to build a company in a disciplined way. Seems sort of obvious, really hard. I tell you that not many people have really figured this out and have clear answers to these questions. Okay, now what is Fractal's where to play? Right? One of the major decisions we made, this is in 2014, we defined that Fractal is going to only serve what we called as the must-win clients. So we defined we've designed a framework called 10-20-30. 10-20-30 is companies that are 10 billion in revenue, 20 is at least 20 billion in market cap, and 30 is have 30 million consumers. So any company that has 10 billion revenue or 20 billion market cap or has 30 million consumers is a target client for Fractal. Right? So there are, at that time when we created this list, there were about 600 companies that met that criteria. And of that 600, we picked 250 and we created a list and said, these are the companies that we want to serve. And by the way, we don't want to serve anybody else. This is so liberating when we know who not to serve. So you don't chase every single opportunity that comes your way. We were, for example, chasing a whole host of opportunities because some salesperson says, hey, it's a good opportunity, let's chase it for what it's worth. Deciding not, because eventually selling is about time management, right? So if you have to decide how to spend your time. So by deciding who to serve and who not to serve made a big difference. Now, in terms of horizontals and audience, this has expanded over the years, but the idea was initially when we started, it was about only serving the chief analytics officers. Over the years, we've added a few functions, but CXOs, that we want to serve only CXOs. And third, in geographies, now it's expanded to Australia, for example, but initially when we built in 2014, it was only US and UK to begin with. Most important decision we made, not to serve India. It was a brutally difficult decision because we had so many inbound leads coming from India, because friends of friends, others were always bringing in leads that we could serve. To say no to all Indian clients, it was a very hard decision to execute because all the major senior people in the organization could bring in new leads from India, and anybody who brought a lead would think that, okay, this opportunity is really good, we should go after this. To say no, but in a disciplined way, made a massive, massive difference to Fractal. So I mean, if you take nothing away from this discussion or this workshop, I mean, the where to play decision and where not to play decision, I think is the most crucial decision. We decided to drop India, China, Japan, Middle East, Korea, and most of Asia. We dropped all of those geographies. We dropped a whole host of verticals where we think we didn't have oil and gas, these kinds of verticals. We said, no, we won't be able to serve them. And if there are inbound leads, we said, okay, we will not stop inbound leads from coming. We said, if it's not $1 million opportunity, we will not pursue those deals. If it's not a 10, 20, 30, it's not $1 million in size, we would say no. I have to tell you that is the most difficult part, because we have to go and tell a client or a prospect to say that, look, I'm sorry, but we don't think we can serve you. It's actually tough. But we have done that, and actually clients have appreciated. And what we did is to refer those opportunities to other friendly companies that we knew who could serve them. So we did not want to leave them high and dry, but we would also connect them to companies that could serve them. That was very helpful. Then that is where to play. Now coming to how to win. We defined our how to win. Again, I'm only how to win again is on all the vectors, right? If I'm right now only focusing on clients, but like I said, where to play, we had to define across where to play with clients, where to play with talent, where to play in terms of mergers and acquisitions and investments. But right now I'm focusing only on that aspect, which is around clients. Now, how to win clients. We defined that there are 3 key moments of truth as far as clients are concerned for us. The number one is 0th moment of truth, which is, let's say they have a problem to solve. They're trying to do some AI to, let's say, automatically process their claims in their insurance business. When they're looking for companies that can do it for them, does Fractal feature in that list of companies that they're exploring? That we call it the 0th moment of truth. We don't know them. They are looking for a problem to solve. And does Fractal figure out in that list? That's the 0th moment of truth. Can we really win that 0th moment of truth? Right? It's hard. Smaller companies, harder, right? So if people search on Google, or they talk to a Gartner or a Forrester or various people, do they hear of Fractal as a name there? That was the 0th moment of truth. The first moment of truth is when you have an opportunity to meet them. At the end of that meeting, do they really feel like they should work with Fractal or with you, right? That's the first moment of truth, because so far they've heard about you, but the moment they meet anybody from Fractal or anybody from your organization and have a conversation, do they feel that this is a company I should do business with or not? That is winning the first moment of truth. And the most important moment of truth is the second moment of truth. Once they've agreed to work with you, once they have won that first moment of truth and you've got a project or a business, right? Do they really enjoy working with you? How do you manage that? Right? And do they really want to work with you again? Second moment of truth. So the 0th moment of truth, extremely hard to win because it's very expensive to win the 0th moment of truth, right? Unless you're really good at PR, marketing, other things. There are various ways to do it, but it's hard to win that, especially with limited resources. The first moment of truth, it's up to selling, right? Up to sales team, the senior team, how we present ourselves. That's the first moment of truth. Second moment of truth is all about delivery and client growth. Can we really serve them really well in such a way that they want to work with us again and again? Brutal, obviously very, very simple, but again, a very powerful way to think about your business, the moments of truth. And winning that moments of truth requires you to build trust. It's all about building trust. And David Meister has this framework called trust is equal to credibility. Right? Are you really credible in what you're selling? Are you reliable? Do you have a good relationship, intimacy? And the denominator is self-orientation. How much is it about you and how much is about them? We'll unpack that in a little bit. Let's talk a little bit about selling, right? Winning the first moment of truth. One of my board members used to tell me, a CEO has only 3 jobs: hire, fire, and sell. So, I mean, hire and fire, of course, I think many of us recognize, but sell. It's very important that every CEO is eventually a salesman, right, or saleswoman for their company. They are representing the company. And if you don't take charge of sales and you think that sales is somebody else's job, like I'm the product guy or I'm the product person and there is somebody else who will do sales, there's no way of success. So, and several companies actually do a very bad job of treating their salespeople, understanding the difficulty of the salesperson's job and really being with them on that job is super important aspect of selling. I'll give you one example of very early days of Fractal. When we were working with, this was when we just started our analytics business, we had zero clients, no credibility. So one of the things that we were trying to sell this idea to ICICI Bank, and we were proposing that we build a 30-minute loan product. So anybody could walk in, get a loan. This is early 2000. And ICICI said, you have no credibility. You've never done this before. Have you done this before? And we said, no, we have never done this before. So, how can we trust you? So we basically built a research paper, wrote a research paper on credit scoring and risk models, and how to build risk models, and gave to them and said, look, we have done the research. We know how to do it. And by the way, we also agreed to do the first project for free for ICICI. And we had some expectation that they'll refer us, they will give us other business later on, etc. But we invested in building our own credibility, which made a big difference to Fractal's success in future. Second is, working with HDFC Bank, right? We worked extensively with HDFC Bank over a number of years in the initial few years of Fractal. And it took us a long time to establish that with HDFC Bank. We realized that HDFC Bank is a phenomenally good bank in terms of executing, but it took us, we had to basically educate a whole host of people across the bank, including Mr. Puri, including Paresh, who was a chief risk officer and the head of the personal loan business and credit cards business, etc. It took a long time, but once they felt that we could really trust these guys, and we did a pilot for them, and once we succeeded in that, HDFC Bank really scaled that business up significantly. And HDFC Bank was our largest client for many years. And interestingly, Rajesh, who used to be the head of their risk when he recently left in 2019, in his farewell party, apparently he spoke about when somebody asked him the question, what are the highlights of your career at HDFC Bank or 25 years of career? He said, working with Fractal on the debit scorecard was one of the most defining moments of his career. I'll tell you what the debit scorecard was. The debit scorecard was a way in which HDFC Bank pivoted from external acquisition to internal acquisition. So what we uncovered through our work on their data was that people who are already in the bank, who have a savings bank account with the bank, are much better when you give them loans as opposed to people they bring fresh from the outside. They were the difference night and day in terms of their risk profile, in terms of default risk. So that helped HDFC Bank create a scorecard called the debit scorecard, where we look at the banking data and assess credit risk. And that they used to internally acquire customers. And that made a big difference to them in 2008-9 when the global financial crisis hit. HDFC Bank was one of the most successful banks in the world. And even today, they're trading at 5 times the book value, one of the most richly valued banks in the world because of their ability to understand risk. And to have played that small little part in their journey was very important for us. Now, I want to tell you a little story about our win with one of our clients, right? So this was, I've not named the name of this client. This is one of the largest consumer goods company, and they had started working with us in Cincinnati, and they visited us once. And the key gentleman from their organization was a gentleman called Guy. And Guy, visited our office in Mumbai, and then he was leaving on over that weekend. He had other business in Mumbai. And on that day, it was, I think, 2011, if I'm not mistaken, 2011, 2012. So he visited our office on a Thursday, and he was supposed to leave on a Friday. On Saturday morning, it struck me that there are these ash clouds in Europe. Right? There was this, Europe was Iceland, and across various parts of Europe, there were these ash clouds. And because of the ash clouds, a lot of flight disruptions were happening. So I wrote a one-line email to Guy saying, hey, I hope you reached Cincinnati back safely, all okay with you. Thank you for visiting us and Fractal in Mumbai. I got a reply literally 5 minutes after that saying, hey, no, I have not been able to go back to Cincinnati. My flights have been canceled. I'm sitting in Mumbai. So I wrote back a minute later saying, hey, I'm in Mumbai. Can I come and meet you? And I'd love to show you around. So he said, yeah, why not? So then my wife and I, we just took our car, picked up Guy from his hotel and just gave him a tour of the city. I mean, we showed him a cricket match that was going on, and his son was doing a project, a shoebox project in India. So where he was collecting some things. So we went to the market in near downtown Mumbai, and in that the flea market, we picked up couple of knickknacks. Just had lunch together, spent the day with him, and then dropped him back into the hotel in the evening. And that relationship has been one of the most vital relationships for Fractal. I mean, even today, because we built that person-to-person relationship with him. And so he still believes, he really likes Fractal because of the trust that we could create in that one interaction with him. Over the years, obviously, we've kept building on the trust. He tells me, one of the things he tells me is that I once called him, and I don't remember this actually, he reminds me that I once called him and said, look, there are these 7 people or 8 people working on your project. And the 2 of them, we recently did a performance appraisal, and we realized that 2 of them are not doing very well. So I'm going to proactively move them to another project and get you A players on your project. So his point is that someone doing proactively, telling me the issue and then fixing it, he feels like that was a big moment of trust for him. Eventually, people do buy from people. We think that it is Fractal doing business with P&G, it's Fractal doing business with Unilever. But if Fractal and Unilever are two mythical entities, the real people are the people who are actually talking to each other, and building that trusted relationship with the people is super important. Okay. This is an example of working with one of the largest retailers in the US, in Chicago. And we spent several days and several visits. I was based in the Bay Area back then, made those long flights from San Francisco to Chicago, spent the day. After 2-3 such trips, we figured out that we are working with their sort of a team that's called PI, or personalized interactions. After spending time with multiple various units of the business, we figured out that the problem they were trying to solve is about personalizing every message to every customer of theirs. So, of course, they knew that. But having understood that from multiple stakeholders, we could put together a vision document, one slide. We said, this is what your vision looks like. We think this is what your vision looks like of what you are trying to solve for as Sears. They saw that slide, and the next moment was that, I want this. I really want this. Can you make this happen for me? Because what we had done was, having spent time with multiple parties in that large complex organization and understanding the problem from various lenses, we could distill the essence of the problem they were trying to solve and a vision for what the solution would look like. And that is a vision that they wanted to buy, and they wanted it. They knew that the entire vision would take multiple years to happen, but they wanted to go in that direction. So one of the insights for me about selling is that when you are in the first meeting that you have with a client or a prospect, right, you get to hear from them. You get to hear the problem from them. If you're really good at selling, you're spending much less time talking and much more time listening. And in that time, you get a sense for what the problem is. And in the next logical meeting, if you're able to show them a vision for not only that you've understood their problem better than anybody else has been able to articulate, but you have a vision for how that problem can be solved, right? A vision, not a solution, mind you, that a vision for how the problem can be solved, people will buy that vision, right? So that's another insight that I've had about selling, right? And like I said, sales is happening when the clients are speaking. We all feel that selling is all about telling a good story, representing your company really well. I would say that the best examples of sales I have seen is when we have been listening and the clients are talking and the prospects are talking. They're describing their problem. If you get a permission, if you have the permission to hear and understand the problem, that is when sales is really happening. So one example of that is we went to, this is General Motors, like the famous example I was telling you where which company that went bust. But when we went to General Motors, we had no agenda. We didn't know what problem to solve. General Motors is such a large, complex organization, already $180 billion organization at that time, right? So there's simply no way we could tell them what to do differently. What we had to do was to meet the people, understand, and create a situation where we can actually hear their problem. It so turned out that the problem that General Motors was trying to solve at that time was reducing their telecom expenses. They were spending $1 billion on telecom bills. They had a 5-year contract with AT&T, spending $1 billion on telecom. And they wanted to see, on looking at all the expenses that are coming, they have itemized billing of all of that. And they want to see within those itemized bills, what are the expense reduction possibilities? Where are they getting double billed? Where are some of the errors happening? They knew that about 5% of their bills could be erroneous. So that could be literally, I mean, it's a significant saving they could get if you could identify those 5%. It was impossible for us to have figured out that is a problem that we are solving. But how do we get to a place where you earn some trust and get the permission to hear their problem? Once we knew the problem, we could definitely articulate it very well and come up with a solution. But my point is, sales is happening when clients are speaking, not when we are speaking. And so that's one insight about selling. And then after having built a successful business in India, right? We had built a successful business in India. We realized that we basically explored across the board, right? We looked at India, Singapore, US, and once we got this insight that I made this trip to the US in 2004, and we moved. My co-founder and I moved to the US in 2005, and recognized that the really big market is the US. After having done exploration, we decided that, okay, this is where we have to pivot. This is where we have to build the business. And it meant that deprioritize the other regions, which was so hard. But that is, again, another thing. You can explore, but at some point of time, you could start to exploit what you've learned. And if you're not able to put all your money where you think the biggest opportunity is, it's also dangerous, because that essentially becomes a defocused strategy overall. The last point I want to mention about building the sales engine is that, yes, initially it's all about personally selling, right? As a CEO, you have to be the person who's selling, but eventually you have to build an engine of sales. And that is very, very hard, right? Moving from a founder-led sales model to a sales engine where you're reliably getting lots of leads, lots of opportunities, etc., means that there is a lot of experimentation involved. There's no easy way to get sales right in the first go, right? You have to experiment. You have to hire multiple people. I'd say that at least 2 salespeople in any geography or any area, because if one person fails, you can't tell whether it's because the product is failing or the salesperson is failing. You need at least 2 to make the determination that, oh, product is not failing because the other salesperson is succeeding. You'll also make mistakes in hiring salespeople. It is fait accompli, right? Because initially you'll attract the least successful salespeople, because they're the ones looking for a job. They're the ones who are ready to join you. From there to attracting the best salespeople is something that you have to keep learning. So spending time with salespeople, figuring out not just their outcome measures of success, but looking at their input measures. What is the activity levels? What are the kinds of conversations? What are the kinds of insights they're bringing in? What kind of trusted, can you be a fly on the wall in some of the conversations and see how are they running those conversations? That gives you an insight into whether you're really building a sales team, good sales team or not. So building the sales engine requires you to invest, requires you to experiment, requires you to build, you find a way to hire these kinds of salespeople. One of the things I do about sales interviews is go deep into understanding their success stories, right? Not just principles. Everybody can rattle off good sales principles. What you have to do is to pick their success stories. So I usually go into discussing some of the successes that they have had as selling, and go into the excruciating details of every little thing that happened. Just visualizing that situation. Okay, what happened in that meeting? Who are all the people in the meeting? Who else was there from your side, right? What were the clients saying? Then what happened? These are curiosity questions. You're not trying to determine right or wrong. What you're trying to do is to fully grasp the situation from the salesperson's lens and how he or she won that client across various conversations. What are the complexity of the sales and how did she or he manage? Then you can find the right salesperson, because anybody who can walk you through that success in a very convincing way is probably a salesperson that you must hire. Many people you'll see is that these are not salespeople. They come and pretend to be salespeople. Some of them are inside salespeople who have never sold anything. Some of them are experts who think that just because they are experts, they can sell. I'll give you one example. Once, one of the largest search firms in the world, we had given them a mandate. I won't name their name, but we had given them a mandate to hire the chief sales officer for Fractal. They showed one candidate and said, this is the most impressive candidate, sales candidate that we've had. He is amazing. He's been there, done that, etc. Now, so it was so impressive that both Pranay and I, two co-founders, decided to meet him in our New York office. He came, and 20 minutes in, I asked him this simple question. Do you make cold calls? Are you comfortable making cold calls to clients and prospects? And he looked at me and said, Stanford MBAs don't make cold calls. You don't hire Stanford MBAs to make cold calls. And of course, the rest of the meeting was all fine, but that instant I knew that he's never going to be a sales guy. He'll never be a successful. Sales means that you have to be comfortable in making cold calls. And the moment you think that it's beneath your dignity to make cold calls, then certainly something is dramatically wrong with you. It turned out that this person had always been an expert in selling, and he was assisting the salespeople, but he had never sold a single dollar of revenue himself. right? Yeah, Stanford MBA, great, but not going to be a good chief sales officer. That was very clear. So building a strong sales engine is actually one of the tricky things, but mastering that is also essential to building success. So what I'll do is I'm going to take, maybe I'll spend a few more minutes on client growth, and then we'll take a quick break and bring Samir back up at that time. So now that you've built a sales engine or you built a few successful clients, how do you grow those revenues? How do you do land and expand? We all know that account management or relationship management and building client business is super important to overall success. That goes without saying, but how do you do that, right? At that point, I'll mention that Fractal's value is about, we very explicit with our people that wherever there's a trade-off between client and Fractal, put client before Fractal. Client before Fractal, Fractal before team, team before self. Explicit, clear guidance to everybody in our organization that if it's best for the client, even if it's not good for you, we'll do it. I'll give you a couple of examples. Yeah, this was with one of our largest clients. You can make out based on the building here. So we had just managed to create $1 million relationship with this client. We had already worked with them for 4 years. They had done a global RFI and to find an analytics player. They selected us. After 4 years of working, we had got to about $1 million, somewhere around the $1 million run rate with this client. And it was already becoming a very significant part of our business. I think maybe 15-20% of our business, something like that. And then one fine day, we get a call that, look, we have decided that this piece of business that you're doing, we want to transition this out to another vendor who's going to be cheaper than you. Okay, and this was one of the technology vendors from our country, reputed technology vendors in our country. I'll not get into the names. So they asked us to transition this business, which is basically more than 3/4 of what we are doing with them. They want to give it away to this other slightly lower cost option that they had, not slightly, significantly lower cost option that they had compared to Fractal. This was such a painful moment because we had worked so hard to get to this place, and now this entire business is going to move away, right? So after going through initial crisis and anger and everything else, right, and we're processing this issue a little bit. After that, we decided that okay, this is what it is, right? We will go ahead and do the best job possible in transitioning this work to this other. It was a project called Revenue Pulse. Okay, so we'll transition this Revenue Pulse to this other vendor, right? Next 6 to 10 weeks, we were supremely diligent in transferring this. Right? The client was very happy because we took it upon ourselves to make a brilliant job of making sure that the next vendor who comes in is able to fully take this up and do a great job in delivering this. We did that. Client was very happy with how we had conducted ourselves. It so happened that this client became one of our largest clients. At some point of time, even 30-40% of our revenues, not anymore, but at some point of time, they became very, very big for us. And they've continued to be one of the most important clients for Fractal because the way we treated them on that exit decision inspired them to work with us more. So it was very hard, but it worked. And there's actually a very beautiful ending to the story that 4 or 5 years after we did this, the client came back to and said, this piece of work, Revenue Pulse, that we had given to the other vendor, we want to actually give it back to you. And we were surprised because we were only getting a little bit more expensive over the years. And so we were a little surprised as to why they want to give that business back to us. So we took it on, and the explanation there they gave us was that apparently they were cheaper, but Fractal on an overall basis was significantly cheaper from them. Like they say, आधा किलो सर्फ 1 किलो सस्ते पाउडर के बराबर होता है, right? It was like we were able to do this. We had automated a whole host of things. We were able to do it with much fewer people. So we ended up being actually far cheaper than this other option. So that was the reason. But in any case, what I would say is that doing what's best for the client has worked for Fractal. I don't know if it will work for you, but I will in any business that I will ever be part of, I think this is something that I think we should do. So one more example of playing the long game, right? This is with a client that we were working with their Australia business, right? And we had this big presentation to them in Manila. And my co-founder Pranay had just flown either Manila, I don't know whether it's Manila or Singapore, but had just flown to that destination for that very major presentation the following day. So he calls me, I think it was something middle of his night for sure, maybe 10 p.m. my time, post midnight in Singapore. And he calls me and said, Srikanth, there's something wrong. Something wrong. I said, what's happening? You have a presentation tomorrow. He says, Srikanth, the data is all wrong. Really? He says, yes, we've done all the analysis. We have the final presentation. It's a very significant presentation, but the data, underlying data is all wrong. So next morning, we went and told the client that many people had flown over various parts of the world for this presentation, in Manila or Singapore. And we had to tell them that the underlying data that we are using is all wrong. And by the way, this is something we've done some more work after that, and this is the issue. It turns out that one of the data partner, it was not Fractal itself, though we did not know at that point of time. It turned out later that the underlying data was already wrong because the data partner that this company was working with had these data errors in this entire geography. In the Asia, Australia geography, they had some issue with the data. Data was actually all wrong. Now, this ended up being a very bad thing for Fractal because, of course, the project was canceled and we lost that part because and the client did not get any value out of that. But because this data had to be fixed for 18 months, this client suspended all work in this region because till the data partner got the data right, they didn't want to do any work. So we had to wait 18 more months to get any business from this client. But it was important. It was the right thing. And this client, again, one of our largest clients, because of having played that long game with them. So what I'm actually trying to say is it's all about building that trust with the client, and doing what's best for client eventually is what wins the client trust. Right? And looking at the client success from the client lens, right? We sometimes think project completion is all it is, right? We got the project, we got paid, it's all done. But are we succeeding? Is the client succeeding? Is the client able to implement what we've built for them? Is the stakeholder who's working with us, is she or he successful? Seeing the success from their lens and not from our lens is one of the crucial insights. So working, for example, some of the stakeholders that we work with, they have worked with us across various organizations. Some of them have actually, for example, have me as a reference when they're working with an Egon Zehnder or Spencer Stewart. They put me as a reference because they feel like, that is some of the most defining work. So are we in a place where they think of Fractal and me or somebody else at Fractal as a trusted advisor? And can they feel like their success is what matters to us more than anything else? Okay. And the net of all of this is that Fractal's Net Promoter Score has remained very robust. I've already mentioned this briefly. And over the years, around 2016, we started thinking, how can we take this to the next level? What is true client centricity, like Jeff Bezos says, is about inventing and investing on behalf of our clients. So we started investing, about 10 to 15%. Last year, 19% of our revenues in building products before the client asks. And somebody asked the question, how do you build entrepreneurs? These are all the businesses where there is an entrepreneur involved, a Fractal entrepreneur involved in building these things. Right? So these are all the various things we've started investing in on behalf of our clients, doing R&D so that we can be relevant to them when they need us, right? Before they ask. So that's all has led to the kinds of impact that we've been able to create for our clients. So summary is that this is how we define as Fractal strategy. The number one leg of our strategy is be very selective about who we serve and decide who not to serve. Serve them end to end, and not just serve them end to end in terms of solving problems through AI engineering and design, but also drive success for stakeholders. And finally, invent and invest on their behalf. This is the simple strategy statement of Fractal, right? The first leg of the strategy is take client centricity to the next level, and this is how we do it. And staying true to this is the back of the envelope strategy slide here, but it is super important because it's extremely clear and extremely directive about how we want to build Fractal to the next level. So with that, I'm going to stop and maybe request Sameer to be back on stage to discuss any questions.
So Srikanth, time's really flown. We are down to the last 15 minutes. There's so much to unpack and process here. And just because I'd like you to have a breath as well, and maybe have some water, I'll ask you one question around messaging. When we spoke about messaging earlier, when we were planning the session, you said there was a certain bit about messaging that really helped you and to put that into that growth framework that you have. So maybe if you could talk about that a little bit.
I think, from a messaging standpoint, I think that, like I mentioned, being very clear about who to serve and who not to serve, right? That has been the most important aspect of it. Investing on behalf of our clients, investing 12-15% of revenue, being end-to-end by bringing AI engineering and design, not just smart algorithms, but think of if you have to drive results, it's not algorithms plus engineering plus design, that, and then building a great place to work. So this is really what we mean by how we're building Fractal, and successfully communicating that to the world at large has meant that we have been able to attract good talent and been able to also attract clients who believe in us. I don't know if I missed the question. Yeah.
I think you talked about how you use data to help them in decision making. I think you said that you were selling AI earlier, and then suddenly you just change it to something else.
Yeah, great point. This is about how we solve problems. I think the big change that we were able to bring about was, earlier it was about, analysts, analytics professionals, we all get excited by data. We all get excited by math, right? And I also get excited by human behavior. But this is about enjoying the craft of analytics. But if you think about why are we doing this, it's about powering decisions, right? So the big pivot for us was, okay, instead of thinking data forwards, many companies think data forwards, right? Which is like, I have great data, what can I do with it? What problems can I solve? And what patterns do I see? This is generally what happens. Even in my experience, has been many clients also start with saying, tell me what's in your data, and tell me what's in my data. But it usually is just exploration for the sake of exploration. It doesn't work. What you really want is decisions backwards as opposed to data forwards. Big pivot is think decisions, build it from decisions backwards rather than data forwards. And if you think decisions backwards, framing the decision or framing the problem correctly is important, which is the design element. The engineering element is that if you have to automate decisions, you have to get data, but also automate decisions at the end. And you certainly have to bring smart algorithms. So that has been now it's becoming more and more popular. AI plus design is becoming very popular, and behavioral sciences plus data science has become very popular. But we started speaking this language in 2015, 2016, and it has been very helpful in actually getting to solve very good problems and driving those results. And most importantly, even driving that message inside the organization. Fractal is 3,500 people now. It's really large and complex organization. So everyone has to know, crystal clear, have an understanding that we are here to solve and drive results. We are not here to just do some analytics or find some patterns in data.
Awesome. So let's jump to the final session then, culture, people, and systems, and then we'll see if we have a few questions. In fact, I do have one from Kiran Ellis. So that's more on talent. So when you talk about people and systems, I'll bring that up around that time. So okay, over to you for the third one.
I'll go rapid fire from here. And if you can have the slides back up, I'll try to, and we have told you multiple stories, but I'll now accelerate a little bit. So team, can you have the slide back? Thank you. So on culture, right? Like I was saying, smart organizations, easy to create. Healthy organizations, much harder. And it doesn't matter how big the organization is. I've seen that any organization that's beyond 10 people, it starts to happen. Beyond 50 people is another level of scale. Beyond 200 people, another level of scale. And at that 200 people level, all sorts of things begin to happen, right? There can be politics, there can be confusion, there can be many such issues. So getting that right and realizing that at a small level, it's a family, then it becomes a little like a small village, and then it eventually becomes like a city, and then it becomes like a nation. So understanding that different systems are required at a family level to a national level is important in terms of the organization. But the idea is how do we build a healthy organization with minimal politics, minimal confusion, and a clear moral compass, which we discussed around ethical leadership. And culture, I think, is picked up by very small little clues. I'll tell you one incident that happened in Fractal a few years back. We had this very limited parking space available. So it was a first come, first serve parking situation. And one senior executive came and said, Srikanth, I need a parking spot. I said, no, nobody has a parking spot in Fractal. Everybody is first come, first serve. But he said, no, you have a parking spot. So it turns out that my driver, the person who was driving is my chauffeur, he had reserved a place for it because we are going in and out. So it put a little sticker on one parking spot. And that led to senior people in Fractal asking for their own parking spots. So I went down to the basement, tore off that sticker and said, nobody has any parking spots. The reason I'm telling you this story is that these small little things about who matters in the organization are very important. There are banks that I've worked with where as a management trainee, I would have access to the executive washrooms, but the people who have worked for 10 years, don't have access to those washrooms. There are some law firms I've seen where there's a set of toilets for partners and clients and one set of toilets for others. It doesn't make any sense, but culture is defined by these small little things that we may take for granted. So those same rules apply for everybody, right? We've already talked about Fractal's values. I'll skip that. One of the things that, for example, Ray Dalio does in terms of creating a culture of transparency, radical transparency, every meeting is recorded. In this company called Bridgewater, which is one of the largest hedge funds in the world, every meeting is recorded and every person in the meeting rates every other person in the meeting in terms of their behavior. Radically transparent. Does the boss get to hear all this from somebody? I mean, I think the question, Samir, you had asked me was, what was your growth moments, right? Getting feedback from others. Are you receptive to feedback? Are you making it safe for people to provide feedback? Ray Dalio has done that. It's a very important cultural element. In Ford, again, when Alan Mulally took over the CEO of Ford was losing $17 billion a year. And he was running these weekly staff meetings where they were looking at the scorecards, red, green, and yellow, right? After various division presidents. So large, big organization, right? All scorecards were green in the first week. A couple of weeks later, all scorecards still green. So one day, Alan Mulally says, something must be wrong here, right? Because we can't be losing $17 billion and have all scorecards being green. So next week, Mark Fields, who became the next CEO, raised his hand and said, I have this problem in Canada. I have this issue in one of my plants where I have this problem. Turns out many people could help him, but he was willing to raise his hand and say that my scorecard is not green. And a few weeks later, everybody started showing their vulnerable side, right? Where are my problems, and getting help from others. So many cultures are based in fear, right? The CEO or the boss or the entrepreneur doesn't get to know what is going on because there's a culture of fear. Everything is good. Emperor has no clothes, but nobody's going to point it out, right? So having a culture where people can express themselves, be vulnerable, super important element in creating growth. In Fractal, we have a thing of how do we treat people on their way out, right? So we essentially is that clients or people, how we treat them. When this, I told you about the incident of transitioning work out, revenue pulse work out to somebody, I think, but also when people leave, do you really treat them like as if they're still part of Fractal? How you treat people on their way back makes a difference. And we have got so much business from ex-Fractalites, ex-clients, because they have really liked how we have treated them. It's again a very important feature of culture. What are you doing when you can afford to be mean? Are you being nice or not? So that's on the culture side. I try to go very quickly. And on people's side, again, Google paid $44 million to hire Jeffrey Hinton so that they could build their AI capability. A very, very interesting story of how they ran an auction. But they recognize that game-changing talent is expensive. It costs way more than average talent. And bringing that talent is a critical ingredient to success. So if you infuse enough game-changing talent, they can pull up the rest. But if you don't, the good talent will want to leave, and only the mediocre talent will want to stay. Right? So Fractal has been raising the bar. We hire less than 1% of people who apply to Fractal every year. So 1 in 200 people who apply to Fractal get through the process. And having built that engine around hiring and making sure that the best people are hired has been, again, an important hallmark for success. And once they're in an industry like AI, where half-life of knowledge is 3 years or less, you have to make sure that there is a career track orientation, build everybody's career, and give them enough opportunities to learn. So we created a Fractal Academy, which has been also very successful in imparting new skills and new knowledge to people as they're growing in the organization. So that's essentially the second pillar of our strategy, is continue to build a great place to work, which is building, hire the right talent, create a culture of transparency and trust, and let them do their best work within Fractal. So that's really, I've just given you our entire strategy framework of 2 of the 3 slides. This is the second slide, which is what we presented to the board, by the way. And where we play in terms of people, I mean, I've talked about where to play, some of the decisions we made of where to play and where not to play. And the third and the final leg of our strategy is build those engines of scale, right? Invest ahead of time in technology, systems, and processes, because by the time you need them, you should have already invested 2 or 3 years before that. So can you make scale happens when you invest ahead of time? So building an M&A and integration engine, last year we did 5 acquisitions. And if you had not built a good engine to find and spot M&A and do the integration, we couldn't have got there. So I've been thinking of Fractal as in terms of the various engines that we have to scale, and investing in those engines has been very helpful. And last one is about being a responsible corporate citizen. The work we did with various stakeholders around the world, we've done so much work that is public facing, because we've also felt that this is important not only for us to be meaningful stakeholder centric company, but also for people to feel part of something bigger than just a company, right? So that's been the third engine of our overall strategy. So with that, I will stop here and request Samir to be back on stage, please.
Thank you so much, Srikanth. So I have 3 questions, and with that, we'll end. The first one is from Kiran Ellis. She says, how do you ensure cultural fitment while hiring? And how do you handle inevitable wrong hires?
Great question. Thank you for that question. Firstly, we look for what we call as humble, hungry, smart. So that's our culture code, is they have to be humble, meaning they should not be arrogant and insecure. So we can get that with a lot of people use a lot of I statements. When I try to go through their life journey, why they quit organizations, how they drove success. When they talk about how they drove success, it's also you get to understand whether they have humility or not. So that is one element, because Fractal needs experts who are also humble enough to serve. So we say you have to have the expertise of a doctor, but the humility of a 5-star chef, right? So you need both of these to be successful in Fractal. So that is one way to look for humility. Hungry, the most important one, which is, are they driven enough? Do they have a purpose? Sometimes it's about finding your drive, but do they have the drive to be successful at Fractal? Do they hungry enough? And smart is emotional smarts. Are they good with people? Are they good with, do they bring in emotional intelligence? Because Fractal is a team sport. So that is very important. Are they able to relate with others? Are they able to work effectively with other people? So this is what we look for in terms of cultural fitment. So these are vital. These are non-negotiable. But we don't want everybody to be exactly cultural copies. So we need diversity as well. So we want to be a little experimentative. But these 3, we were very clear that we will not make any compromises on. And I think there was a second part of the question, right?
Yes. So what do you do when you have the wrong hire?
Firstly is to pivot and see where they could be successful. Sometimes they're not successful because we found the wrong role for them. So it's not the person hasn't failed, the person in the role has failed. Therefore, can we find another role for them? We always look for that. But there are distinctly wrong hires, in which case I think there's no option but to lose. I would say that's not one of our strengths. I have struggled with this decision. As a CEO, the toughest decision is letting people go. But whenever we have done that successfully, it has been very helpful, because remember that everybody else knows before you know as a CEO that this person is failing or is terrible. You are the last one to recognize that. So when you recognize that everyone in your team already knows this truth, and therefore making the decision is sometimes liberating. So that's what I would say.
Sure. A question from Jeremy Lucas. He says, can you please explain a little bit more about the explore and exploit point that you mentioned?
Explore and exploit point is the fundamental in AI models also. Explore and exploit is about saying that you've not discovered all the truths. Therefore, some room for experimentation is required. At any point of time, some new opportunities are there that you don't know about. So you have to invest some money in exploring, but they are explorations, they are experiments, and they are not necessarily going to work. So I think someone said, it ain't an experiment if you knew it was going to work, right? So you have to run some of those experiments and try new things because as a company, we don't think we have found our path to greatness, right? There are multiple other things that we may have to learn. So willingness to explore is important, right? But that exploration to exploitation ratio has to be some. If you're doing 90% exploitation, 10% exploration, that's a model for a mature company. If you're a less mature company, maybe you do 50% exploitation, which means focusing on what you already know where you're succeeding, and 50% exploration. If you're a really new company, you have 80% exploration and 20% exploitation. That's the model.
Adrish C says, what is your experience in selling clients from US and UK? Are there any differences between these countries in terms of the selling strategy?
I think, like I said, people buy from people. I think so people are universally very similar. They have the same fears, wishes, anxieties, aspirations, and so on. I think sometimes there's a communication difference is strong between US and UK. And I mean, US very clear in terms of their asks, very direct, but very non-direct in terms of providing feedback. Americans don't provide very critical feedback easily. Britishers that way are very brutal with their feedback. But in general, when you're talking to British clients in UK, you have to read between the lines because the language is hard. The humor, the dry humor. If they say that that's quite, this is quite okay, it means that it's terrible, right? I mean, if they say it's just fine, and it means that it's really bad. So being culturally decoding the language and to understand what they truly mean, UK is a little harder. But other than the communication barrier, people are fundamentally not very different, in my opinion.
Thanks, Srikanth. So I think that was a great, I wouldn't say workshop, but a masterclass on growth and scaling. There's so many different things to pick up. I noted down a few, and I was struggling in just keeping focused on running this session versus taking my own notes. But here are a few that stuck out for me. Culture as a differentiation you talked about, I think, which is amazing. I mean, when you talk about differentiation for your business, culture can be a differentiation as well. Where not to play, you said where to play and where not to play. So where not to play is amazing. And then the winning moments of truth, how you differentiated between the 0th moment, the first and the second, I thought was interesting. CEO's 3 jobs, hire, fire, and sell. A lot of our SMEs actually do make a mistake. I think a lot of us are not selling enough. And I think that really stood out. People buy from people, we know that, but again, differences in terms of the geographies and eventually it's about building those relationships. Client centricity, I think you gave a few examples. Sales is happening when clients are speaking, I thought was amazing. Always do what's best for the client. I think we always, believe that, sometimes we are right, but I've heard that strategy from other people as well who say the clients are always right. So if you talk about client centricity, you have to focus on the client, no matter you are right or they are right. So do whatever is best for the client. Play the long game is interesting. I think a lot of us, think about this month, this year, not really setting up or building businesses for future. Invest and invent on behalf of clients before the client asks. I thought that was amazing as well. And then finally, culture and people and how do you treat people on their way out? I thought that was amazing. And then humble, hungry, and smart, hiring those people. So all in all, I think amazing, session on pivoting to growth and really thinking ourselves, how do we, at what time and when do we look at some of these lessons and set ourselves for growth? And hopefully after listening to you, Srikanth, I'm really hopeful that some of us have picked a few things and put all of us also on that path of being a unicorn. So thanks so much for being here.
Thank you, Samir. Thanks, everyone.
Soumya, over to you.
Thank you, Samir, and thanks to all attendees as well.